Ever wondered why the buzz around Bitcoin halving and its significance in the crypto world? Welcome to the fascinating realm of cryptocurrencies, a digital frontier where Bitcoin reigns supreme. Born from the innovative blockchain technology, Bitcoin is a decentralized digital currency, free from the constraints of traditional banking systems. Now, Bitcoin halving, a term that might sound complex, is a fundamental part of this digital ecosystem. Picture it as a monetary policy without a central bank. It's an event hardwired into Bitcoin's DNA, occurring approximately every 4 years, and it's a big deal in the crypto world. Why, you ask? Well, Bitcoin halving directly influences the supply of Bitcoin, and supply, as we know, plays a significant role in determining the value of a commodity. In essence, Bitcoin halving can impact the overall market dynamics and the value of your Bitcoin investments. Stay tuned as we delve into the intricacies of Bitcoin halving and its impact on your investment strategies. First things first, what exactly is Bitcoin halving? Well, it's a mechanism ingrained in the very core of Bitcoin's protocol, designed to control the supply of this digital currency. You see, Bitcoin operates on a model of deflation. Unlike traditional currencies where central banks can print more money as needed, there's a finite number of Bitcoins that will ever exist, 21 million to be exact. Now you might be wondering, how do new Bitcoins come into existence? They're mined. Bitcoin mining involves solving complex mathematical problems, and the miners who solve these problems are rewarded with new Bitcoins. However, approximately every 4 years, an event known as Bitcoin halving takes place. Here's where things get interesting. During a Bitcoin halving, the reward for mining is cut in half. Imagine being a gold miner and suddenly discovering that every nugget you find is now worth half of what it was the day before. That's essentially what happens during a Bitcoin halving. The first halving occurred in November of 2012, dropping the reward from 50 Bitcoins to 25. The second took place in July of 2016, reducing the reward to 12.5 Bitcoins. The third halving happened in May of 2020, further decreasing the reward to 6.25 Bitcoins. This halving process continues approximately every 4 years until all 21 million Bitcoins are mined. The next halving is expected to occur in 2024, bringing the mining reward down to a mere 3.125 Bitcoins. These halvings have a significant impact on the number of new Bitcoins created and earned by miners. They effectively slow down the rate at which new Bitcoins are introduced into the economy, creating a scarcity that can drive up the value of Bitcoin. Now that you have a basic understanding of Bitcoin halving, let's see how it affects the market and your investments. Bitcoin halving is a major event, but how does it influence the market? Well, let's dive in and find out. First, it's important to understand that Bitcoin operates on a deflationary model. This means there's a finite supply of 21 million coins, and once they're all mined, there won't be any more. So, every 4 years, the number of new Bitcoins created and earned by miners is halved. This is what we call Bitcoin halving. But how does this event affect the market? The key is supply and demand. When the supply of something as valuable as Bitcoin is reduced and demand remains constant or increases, the price is likely to go up. Essentially, Bitcoin halving has the potential to create a supply shock in the market, making each coin more valuable. Now let's look at historical trends. The first Bitcoin halving occurred in 2012. Prior to this, the price of Bitcoin was around $12. A year after the halving, it had skyrocketed to over $1,000. The second halving in 2016 saw similar trends, with prices steadily climbing in the subsequent year. The third halving in 2020 also resulted in a significant price increase, with Bitcoin hitting all-time highs. Of course, it's important to remember that while there's a correlation between Bitcoin halving and price increases, it's not a guaranteed outcome. Other factors such as market sentiment, technological advancements, and regulatory changes can also influence the price of Bitcoin. In 2024, we're anticipating the fourth Bitcoin halving. While it's impossible to predict exactly what will happen, based on past trends, it's likely we could see another surge in Bitcoin's price. As we have seen, Bitcoin halving can significantly affect the market, but how can you, as an investor, navigate this? Investing in Bitcoin can seem daunting, but it doesn't have to be. Let's break it down into manageable, bite-sized pieces. The first step on your Bitcoin investment journey is research. Don't just skim the surface, go deep. Understand what Bitcoin is, how it works, and the technology behind it, blockchain. Familiarize yourself with terms like cryptocurrency, blockchain, and Bitcoin halving. This knowledge will be your foundation, your bedrock as you navigate the often turbulent waters of cryptocurrency investing. Next, you'll want to choose the right cryptocurrency exchange. There are many out there, each with their own pros and cons. Some offer a wider range of cryptocurrencies to trade, while others pride themselves on their advanced security measures. Take the time to compare your options. Look at their fees, security features, and the user experience they offer. It's crucial to find one that aligns with your investment goals and comfort level. Once you've selected your exchange, you'll need to set up a digital wallet. This is where you'll store your Bitcoin. There are two types of wallets to consider: hot wallets and cold wallets. Hot wallets are connected to the internet, making them more convenient for regular trading but potentially more vulnerable to cyber threats. Cold wallets, on the other hand, are offline storage options, offering heightened security at the expense of accessibility. Weigh the pros and cons and choose the one that best suits your needs. Now we're on to the exciting part: making the purchase. But before you dive in, take a moment to consider market trends. Remember that term Bitcoin halving we discussed earlier? It's a key event in the Bitcoin world that can significantly impact Bitcoin's value. It refers to the halving of the reward for mining new blocks, an event that occurs approximately every 4 years. This reduction in supply can create a surge in demand, potentially driving up the price of Bitcoin. So, when should you buy? There's no one-size-fits-all answer to this question. Some investors choose to buy during a dip, when prices are low, hoping to sell when prices rise. Others prefer to adopt a hold strategy, buying and holding onto their Bitcoin over the long term, regardless of short-term price fluctuations. Remember, investing in Bitcoin isn't about making a quick buck. It's about understanding the market, making informed decisions, and most importantly, being patient. Investing in Bitcoin is a journey. Use these steps as your roadmap. Be prepared for some bumps along the way, but remember, every investor starts somewhere. With the right knowledge, tools, and mindset, you're well on your way to becoming a savvy Bitcoin investor. Let's recap the key points about Bitcoin halving and investment. It's important to remember that Bitcoin halving is a fundamental event in the world of cryptocurrencies. It happens approximately every 4 years, or more precisely, every 210,000 blocks. The process is designed to control the supply of Bitcoin and prevent inflation. It's like a heartbeat, ensuring that Bitcoin's value doesn't go into a free fall. The effects of Bitcoin halving on the market can be significant. In the past, we've seen an uptick in Bitcoin's value in the months following a halving event. This is due to the reduced supply of Bitcoin and increased demand, a classic economic scenario of supply and demand. But remember, past performance is not indicative of future results. It's vital to keep a close eye on market trends and news. Now let's revisit the steps to invest in Bitcoin. The first step is understanding what you're investing in. Bitcoin is a digital currency, a new kind of money that exists only online. It's decentralized, meaning no government or institution controls it. The next step is setting up a digital wallet. This is where you'll store your Bitcoin. Once you have your wallet set up, you can start buying Bitcoin. You can do this through a cryptocurrency exchange. Remember to only invest what you can afford to lose. Cryptocurrency investments can be risky and volatile. It's essential to diversify your investments and not put all your eggs in one basket. And finally, keep in mind that patience is key. Investing in Bitcoin is not about getting rich quick. It's about understanding the technology, believing in its potential, and being patient. It can take time for your investments to grow. Remember, knowledge is power. Stay informed, stay ahead.